Hello, everyone, and Happy New Year, and welcome to this educational presentation of what's keeping you from your success, most specifically, trading success. Now, the reason I asked this question is because it's been estimated upwards of 80% of all traders fail, and it could be investing, trading, swing trading, it really doesn't matter. And in my nearly 4 decades of trading, I found that it really boils down to just one thing that is really keeping the majority of traders away from their success. So I'm going to share with you what my belief is about this. I'm going to show you a couple of simple techniques so that we can fix this problem for you. And in fact, we're going to actually go into detail about the 5 best ways to invest $10,000. It's the beginning of the year. We're going to be starting off a new year. Hopefully a lot of people want to get on track this year with their trading and most especially investing. I'm going to share with you once again 2 great techniques for applying all of this and putting it all together for you. So welcome once again. This promises to be a great presentation. My name is Steven Primo. I am the president and founder of Specialist Trading. If you haven't heard of us before, well, let's start out 2017 right. We are an educational company. That's where we differ from most of the other webinars you may be attending or other people that you go to their websites. We're all about simply educating you so that we can put you right on track. Now, I've been trading for nearly 40 years, actually 40 years starting this year. I started my trading career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. A specialist was just a trader, not any more special than anyone else, but just he made markets in the stock. So roughly, if you wanted to buy or sell a particular equity or issue, you had to go to the trader who specialized in that or made the market in that. So I made markets in roughly about 50 stocks. I traded through the crash of 1987 and the bull market that followed. And then I left the floor in the 90s to manage money and to start Specialist Trading and team up with pro trader strategies. So in my nearly 4 decades, as you've seen, I've really experienced just about everything there is. And contrary to what a lot of people may believe, they think that, well, since you had an education in trading, that you must have had a license to steal and it was easy for you, so we're not really in the same category. Well, that's not really true. I make no secret about this. My first couple of years of being on the floor and of trading, I actually suffered tremendously. I was probably in the same boat as a lot of you are. And so I know what it's like to be that frustrated and discouraged about trading and investing. So I was lucky enough to come in contact with a few mentors, and they taught me the things that I teach to all of my students that have really sustained me so that I can be trading for 40 years. And so this is what we do at Specialist Trading. We teach you and educate you all the things that we really strongly believe that will sustain you so that you can not only be having a good month or a good year, but you can be trading 20, 30, 40 years down the line. So that's really our goal, and that's really what our purpose is at Specialist Trading. We are an educational company, as you'll see in this presentation. But before we begin, as always, I ask that you please take a moment to view our disclaimer. We are required to show you this regardless, so please take a moment to view it. I'm going to show you a lot of performance results using a couple of techniques to increase your odds for consistency, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a brief moment to view the required disclaimer, I would also like to state that I would like to invite each and every one of you, if you haven't done so already, to follow us on Twitter. That's our handle right there. You may want to copy that down. Each day I post different information, anywhere from different bits of wisdom, trading wisdom, to actual signals that some of our strategies may have generated. In fact, just a day or so ago, I posted a buy signal that was generated in one of our strategies. So there's a lot of great free information, although it is rather limited. Feel free to follow us on Twitter. Now, as I stated, we are first and foremost an educational company. So I want to really talk about and share with you what's keeping you from your success, because that's really what it's all about. Now, I know that many of you think, well, I do okay, I do well, but really if you look at it, I mean, do you have months where you're doing fine and then you give it all back, and then maybe you're in the hole, and then you make it back again, and then you give it all back, and so you've got this, endless roller coaster with your P&L. That's really not success. Success is longevity. Success is really about sustaining your trading so that you have this nice upward slope. So you have to ask yourself, what is keeping you from this success? Well, I want to start out by sharing with you an article that was in the LA Times just about a month or so ago, talking about the 5 best ways to invest. Now, we're going to be talking mainly about investing today, since it is the beginning of the year, and a lot of people are thinking about where to put their money and their cash. So at the end of the year in the LA Times, they talked about what they felt were the best 5 ways to invest. Now, let me show you what they talked about. Here's what they listed. They said to get your 401k match, meaning that if you're working for a company, to match your contribution. A lot of people feel that this is the best way to invest because that way it'll kind of double your odds for success. Their number 2 best way to invest was by maxing out on an IRA account. Okay. Now, each year you're allotted so much that you can put into your account. So they feel that each and every year you should put the max. Okay. Don't just put a little bit of your savings away, put in the max. And then their third best way to invest was to get in contact with a good financial advisor, someone you can talk to, someone who will help make these decisions about where to put your money. Okay, now this all sounds well and good, and these were the majority of their 5 best ways to invest $10,000. But coming from someone who's been trading for 4 decades and investing for 4 decades, this, in my opinion, these 3 things are what's actually keeping you from your success. This is what keeps you from your success. Why? Well, there are 3 things that these categories have in common. And basically, you are not a part of the decision-making process. Whether you're maxing out your IRA account or matching it with your company or getting a financial advisor, you are pretty much putting yourself out of the game. And that, to me, is the number 1 reason what keep people away from achieving their success that they're looking for, whether you're a trader or whether you're an investor. Why? Because you've, once again, given your power away. You are not a part of the decision-making process. You are simply saying, well, I have no idea how to do this. I'll let you take control of this, okay? Now, this is your hard-earned money. You've worked hard for it. You've saved it. You put a little bit of away each and every year so that you could invest or trade. But then again, when it comes to actually deciding how to, implement it, you're taking yourself out. I mean, imagine someone flying a plane, an airline pilot, saying, well, what do I do now? I'm up in the air now. I've rehearsed, I've practiced, I've done a lot, but now what do I do? Or someone, a brain surgeon saying, well, I've opened up the patient, now what do I do? That's what people do each and every day with their investments and with their trading. They basically just give their power away to someone else because they're telling the markets, I don't know what to do. I'm not good enough to put my money in my own decision-making process, so I'll just let you do it. And this is why the majority of investors and traders fail. You're taking yourself out of the game, just like an athlete, taking themselves out of the game, saying, I don't want to play anymore. But that's not going to get you anywhere. Now, there were 2 more categories that I feel are roads to achieving that success that the majority of traders are looking for, and they were investing in ETFs and investing in stocks. Now, the reason why, it's not that ETFs and stocks are any better than any other tradable or investing type of issue. They're no better than currency pairs or futures. It's just the fact that when you do these things, you can be a part of the process. And that's really what it's about. So it's not so much that ETFs and stocks are better than any other tradable unit around. It's just that you are able to put yourself in to make those decisions. So, as we stated at the very beginning of this class today, my goal is not to force feed you how to trade. My goal is not to force feed you signals. It's not to tell you, well, this is the best market. Come every day to my signal service and I'll tell you what to do, because that would go entirely against what I believe and what I preach. What my goal is to teach you how to trade so that you can make your own trading decisions. This is the same concept that was given to me some 4 decades ago, and which I really believe has allowed to sustain me for 40 years. This is what we try to instill in all of our students and members around the globe. We have students and members in over 110 countries around the world and in virtually every state in the United States, anywhere from hedge fund traders to people who just started learning how to invest and trade are students and members of ours. Okay, so I'm going to teach you now two great techniques so that you can apply to your own trading, and I'm going to show you how to ramp up the odds for success even more. But once again, since we are an educational company, since this is going to be conducted like a class, I love to take your questions, but if you have any, please wait till the very end, probably about another 20-25 minutes from now, and then I'll take all of your questions, okay? So we don't want to slow down the process here by stopping every couple of seconds to ask a question. So if you have a question, just write it down, and I'll get to each and every one of them at the very end. The only question I will answer is the most common one, and that is this being recorded? Yes, it is. We record all of our presentations. So if you have to leave early or if you're having technical difficulties, contact my sister site, Pro Trader Strategies, and they will furnish you with a link to this recording. All right, so let's begin now. Now, since we want to teach you, once again, we're different from most webinars you may be attending or websites, because we really want to leave you with some information that you can start applying as early as today. Let's talk about the two types of investing. Remember, we're going to be talking about investing today. We're kind of veering from the path a little bit. Usually we talk about trading, but you can still use these concepts that I'm going to be explaining to you, whether you're looking at a monthly chart or whether you're looking at a 5-minute chart. It really doesn't matter. But we're going to just talk about investing today, since it is the beginning of the year, and we know we have a lot of new members and students who are into investing. So there are two types of investing, because investing, we're looking at longer term charts, and we're basically trying to just invest in something, so we're only going to be a buyer. We're not thinking about selling or going short. Now, you can still do that in your investments, but it's more of an aggressive type of investor. So we're just going to be talking about conservative investing, which is long-term and only buying. Now, the two types of investing you can do that meet these criteria are continuation investing and pullback investing. Two entirely different ways to approach whatever market you want to invest in. So let's go into detail and explain to you exactly what these two categories are. All right, now looking at any type of long-term investment, and remember, we're only going to be buying, we're not going to be shorting. Markets don't usually go straight up. They have this type of stair-step approach, as you see here in this ideal kind of chart here. All right, we go up, down, kind of a stair-step approach. If you are a continuation investor, here's the way continual investing takes place. After you see a very nice run up in whatever you're looking to invest in, you usually have some type of a down market. Now, this can be a bear market that can last for 3 years, or it can just be a short-term sell-off. But whatever it is, it's a sell-off that you don't want to be included in. Now, a continuation investor waits for this sell-off to conclude, but doesn't try to pick a bottom. What it does is wait for some type of confirmation that we're going back up again. And usually around these spots, and that's where you jump in once we've headed back up again, and hopefully you can catch on to a really nice beginning of another trend, okay? So that's continuation. Remember, you can use that for any tradable market. Now, conversely, pullback trading is entirely different. We're still looking at the same concept that we have this type of stair-step approach long term, but with pullback type of trading, when we have these sell-offs, either these short-term sell-offs where you don't want to be in, or these long, drawn-out, small bear markets, what a pullback trader likes to do is, by using some criteria, they want to pick a bottom, okay? So that's usually what they're trying to do. They're trying to pick a bottom in the hopes of catching price at a very, very low price before we start back up again. So it's entirely different. Continuation is a little bit more conservative because you're waiting for a confirmation, and a pullback is a little bit more aggressive because we're waiting for some criteria to all match up to tell us that a bottom has settled in and we're getting in. Okay, they're both valid. And once again, you can apply these to whether you're trading a 5-minute chart, or in the case we're going to be looking at today, monthly charts, but they still work. In fact, let me show you some examples here. Now, if you are going to be investing in ETFs, and if you're going to be making your own decisions, you want to be using continuation investment style, okay, what we just talked about. Why? Because with ETFs, you have these nice, strong trends. Remember, we're going to be looking at longer-term charts, and we're only going to be buying. But ETFs, since they're based off of indexes or groups of funds, have these more sustained trends, and that's where continuation type of trading really comes into play. Let me show you what I mean here. All right, so we're looking at GLD. This is a monthly chart of the gold ETF, gold shares ETF. Okay, so this represents the price of gold in the ETF form. Now, as you can see here, these are monthly charts going back roughly about 7 or 8 years. We had a very nice run up. This was a bull market in gold. This is where you want to be in. But as a continuation trader, you want to be out when you have this sell-off, okay? Now, this lasted from basically 2013 to 2016, 3 years. And then once you see that you have some type of confirmation that you're going back up again, then you want to get back in, okay? That's the way continuation trading takes place. Now, it could also work where you never get in. As we look at USO, this is the monthly oil fund. This is the United States Oil Fund ETF, represents oil. We see here that from 2014 up until roughly mid-2014, we had a nice uptrend, but then look what happened. We've been going down ever since the end of 2016. So we really haven't had confirmation to get back in. So how could we have, stayed out of this entirely and been able to, exit on a monthly basis oil and then wait to get back in? Or how about J&K? Now this is Barclays High Yield Bond ETF, okay? Now we see here, it kind of looks a little bit similar to the last chart, US oil, the oil fund, but whereas we went up and then we're in a sustained sell-off period or a bear market, at the beginning of 2016, the high yield bond ETF started to go back up. So we wanted to get back in to bonds, okay? And they've been going up until this last recent month here. These are all current charts coming into this past month. Now, lastly, we can look at the mother of all ETFs. Those are the spiders. They represent the S&P 500 index. It's the stock that it basically mirrors the S&P. All right. Now, this is going back to 2003. As we see here, we had a very nice upward market in the S&P 500 ETF, the spiders, and then we went into the 2007-2008 debacle. That was when we had the banking crisis, and we were in a very, very bad crash here and in a sustained bear market. It wasn't until roughly 2010 that we started to go back up, so that's when you want to get back into the market. Now, this is the way continuation trade takes place, all right? We wait for the sell-off, and then we look for some type of confirmation to get back in. Here's the only trouble, though. How do we know that our confirmation is going to be valid? Whereas, we could have easily just gone up here and then rolled over and made lower lows. How do we know when to get in? How are we going to know when to get into oil? Okay? Or is the getting into gold, is it okay? Or is this just a little blip before we go lower? Okay, same thing with the high yield bonds. Well, here's the best way I know, because we always ask ourselves, how do we know when to enter? By applying the PET-D. This is a tool I've been using for 4 decades. I use it on a daily basis. It absolutely makes no difference whether I'm trading on a tick chart or a monthly bar chart, but it is probably the most powerful tool we have at Specialist Trading and Pro Trader Strategies. It's a proprietary color bar algorithm that just tells us the trend direction, okay, of the short-term trend. Now, if we're looking at monthly bars, someone would say, well, how can we find the short-term trend? It's basically really fine-tuned to give you a confirmation that that sell-off has concluded, and now it's time to get in, because most likely we're going to continue in an uptrend. Remember, that's the way continuation trading takes place. But there's nothing you have to figure out. There's no discretion where you have to look at volume and try and figure out if this is sustained, or look at some type of support and resistance levels, or look at Fibonacci or even Elliott wave. Those types of trading are very, very subjective. Sure, there are some traders who are able to use those and apply them to their investing, but I would say they're probably the minority, probably 1 to 5% of all traders. The rest of us, myself included, have a very difficult time applying those to our trading. Why? Because they're too subjective. They're too discretionary. One trader's support may be another trader's resistance. Okay, so there's 1,000,001 things to put together and then to hope and pray that they're okay. So we don't use any of those at Specialist Trading. We don't use Fibonacci. We don't apply any news events. We don't apply, because they're just things that will keep you from your success. We only give our students and members things that will get them in line with their success. And in my opinion, probably one of the best tools we have is this color bar algorithm, the PET-D. All right, so let's look at GLD once again. This is the ETF for gold shares, all right? So we want to see that we were in the sustained upward move. We were out when we started to go down to the bear 3-year bear market, and then we're back in if we're confirming another upward move in gold. Well, let's just add the color bar. As you can see, way back here in 2008 and 9, the bars were already green. These are monthly bars. So we already knew to be long gold, all right? So how do we know when to get out, though? All right, the first red bar, because we had a red bar here and then it went back up. Well, the rule of thumb for trading long-term investments is that when you see 3 bars of a consistent new color, that's your warning that the trend has changed. So we have all of these bars green. They continue to stay green. Sure, we have 1 red bar, but remember, we need 3 new red bars, and we haven't had them yet until right here. And this was in the beginning of 2013. So this was our signal to exit gold, all right? So we could have been long well back here in advance. And sure, we're not going to get out at the top. There's no method that assures or guarantees you get in at the bottom or get at the top. What you want to do is capture a large chunk of that trend. So we exited gold in 2013, and we missed all of this major sell-off. Okay, so we've been out of the market entirely until the first 3 months of this past year of 2016. Then what did we have? We had 3 green bars. So this was our signal to get back in to gold. Now, that's the beauty of using the PAT-D. It's perfect for continuation trading because it gets us out when the cycle has completed to the upside and then gets us back in when it's ready to complete a next new stair-step move to the upside. So right now, even though we've had some large sell-off here in gold, we need 3 bars, just the way we needed 3 right here. If we would have used this to exit, we would have missed this nice run as well. So right now, the tool on a long-term basis is telling us that you should be long gold. All right, let's look at USO. Remember, USO is the United States Oil Fund ETF. So this is telling us about oil. All right, how could the PET-D have helped us with this? Well, once we apply it, we see that we have been long oil all the way up until July, September of 2014. When we had 3 red bars here, what was that telling us? It was telling us that this sensitive tool was detecting a trend change. Why? Because it is so sensitive, it detects the market and just basically translate what the market wants to do. It's not a predictive tool. It will not tell you how low or how high a market will go. It just is basically transferring you as if the market was speaking another language that we don't speak. And it's the market telling you what it wants to do. So the market in oil right here was saying, well, I want to go lower. So if we're investing, we're not usually aggressive short sellers, so you would have exited oil right here in this fund and you would have bypassed all of this sell-off. Now, are we back into oil yet on a long-term basis? Absolutely not. We haven't had 3 bars yet. So there's no continuation yet. We're still in the bear market. So see how this tool has kept us out. The only way you would have lost money is the way 99.9% of all investors invest, is to hold on. And they just hold on and pray that it'll come back. And then by this time they say, well, what can I do now? I've basically lost everything, so I might as well hold on and just wait till I can break even. But as a continuation trader, you want to have some confirmation that it's going up. That's when you get in. And then once you get the confirmation that it's going down, you get out and wait for confirmation that it goes back up again. All right, let's apply this now to the next ETF we looked at. This is Barclays High Yield Bond ETF, JNK. All right, so we had a nice upward move, a downward move, and an upward move. How could the PET-D have helped us? Well, we apply the color bar tool, and we see that as we were going up, the bars remained green until we started to sell off here, but we didn't have a series of 3 red bars until here. This was at the end of 2014 in bonds. So we got out of bonds. We would have exited this ETF. We are no longer in bonds. I don't care what anyone tells you about the economy, what anyone says about interest rates. This is listening to outside sources. Remember, you're taking yourself out of the decision-making process when you listen to outside sources. This could be some financial advisor. It could be some guy on TV, some trading guru. Wouldn't it be much easier and simpler if you just listened to the market? That's what the PET-D does. It translates what the market wants to do and then gives you a roadmap. So the market was telling us in 2014 in terms of high yield bond ETF to get out. All right, regardless of what anyone is saying about the economy, about funds, about interest rates, just get out. So you would have exited and you would have bypassed all this downward move in bonds. And now when you have 3 green bars, time to get back in. This was in July June or July of this past year. And so now we're in bonds if you want to invest in bonds. You see how simple this is? And we're not just throwing fate to the wind. We're not just saying, well, this is an indicator. I listened to this indicator the way I'd listen to a moving average crossover. This is not an indicator like anything you've ever seen before. It's translating what the market wants to do. It's not trying to predict or not lagging. It's the most sensitive thing I've ever used in my 40 years of trading. Lastly, let's look at the spiders, okay? The S&P 500 ETF, all right? How could it have helped us going back roughly 13, 14 years, okay? Well, let's add the color bar tool. As we can see, we were long the markets in 2002, 2003, all the way up here until the banking crisis hit. Now remember, it's never going to get you out of the top. Very rarely will that happen, okay? But that's okay. Wouldn't you have liked to known in advance in 2007, before 2008 hit, that it's time to exit all of your stock funds, all of your S&P 500 ETFs, whatever you're thinking of the market, because the market is saying it wants to go lower. So at this point in 2007, you would have exited well before the crash happened, okay? Well before the recession hit in, and guess what? You could have been in cash or in something that was going up, another market investing in. Now that you're out of the market, it wasn't until 2010 that most people said, well, that's when the market started to stabilize, but we still weren't sure yet. Well, guess what? At the end of 2009, you already had 3 green bars here, 1, 2, 3. So you were already back in the market investing in the S&P 500 or in stocks in 2009. And you've remained long in the market this entire time, the next 7 going on 8 years. Sure, we've had a couple of red bars, as you see here and here. Remember, you need 3 to tell you that a sustained trend is in play. And we haven't had that yet. So don't you think this tool could help you with your continuation trading? All right, that's a more conservative way to be involved in the markets. What if you want to be more aggressive and trade individual stocks? Okay, well then you want to use a pullback type of technique, because stocks don't have those sustained trends at times. Even though we're going to look at longer term pictures here, they still, stocks tend to fit and start every once in a while. So with that type of scenario, we want to be a pullback trader. We don't want to hold on for the long run, because we may be holding on while we're in a sustained drawdown to the downside. What we want to do is try to pick those bottoms. How can the PET-D help us? All right, so let's look at Siri here, all right, Sirius Radio. Here's a monthly chart, and as you can see, this stock was flying high and then it literally fell out of bed. But in 2009, it hit a bottom and started to go up. Now, as a pullback trader, we want to, once we have a nice sustained trend, we want to buy on these sell-offs here. You see, every time we sold off, there's another sell-off, and then we start to go up, and then we sell off. So we're trying to pick these nice bottoms here. How about Apple? Here's a monthly chart of Apple going all the way back to 2009. As you can see, this is, with the split and all the splits in place, we had a very nice run up here, and then in 2012, going into 2013, a rather steep decline. But as a pullback trader, you would have wanted to purchase somewhere around here, right? And then look what happened. The trend resumed, all right? And so as we started to sell off, you'd like to purchase somewhere around here. This is the way pullback trading takes place. Unfortunately, I know of so many people who are not members of specialist trading who said, boy, I bought Apple right around here when it was taking off, and I made good money for a good 3 to 6 months. And then when this happened, I sold, and then I watched it go all the way back up, but I never got back in. Does that sound familiar? I'm sure a lot of you have done that, possibly with other stocks. That's the way the majority of traders or investors trade. They get in a day late and $1 short, and then when they see this loss is taking place, they go, boy, you know what? I can't stand this anymore. I've taken a large loss. I'm not going to take an even larger one. I'm getting out. That's usually the time to get in if you're a pullback trader. That's why I always say when you're involved with stocks, it's much better to be a pullback trader than just to simply buy and hold, because these sell-offs that will occur from time to time are very nerve-wracking and can be very frightening, and it can many times scare you out of a position and have you exiting when in fact you should be entering. Let's look at another stock here. This is Facebook, all right? This is going back since the inception of the stock, going back to 2013, and we've been just really going straight up. So has there been any pullbacks here? Well, I'll show you exactly when and if a pullback has taken place. And then lastly, Netflix. All right, we've all seen Netflix go from basically a $5 stock just to hundreds of dollars. And as we can see here, we started out tremendously. Now, if you had just simply bought and hold, I can almost guarantee you when the stock dropped tremendously, you would have exited. But this is where pullback traders like to buy, somewhere down here, because they know that we're going to continue the trend. And then on these sell-offs, buy again, and then just last year, buy again. All right. Here's the only problem, once again, with pullback trading. How do we know when to enter into a pullback investment? Most traders love to use Fibonacci. They love to use support and resistance, Elliott wave or volume, or the worst case, they listen to some advisor, some trading guru, okay? But if that works so well, once again, if all those techniques are great, then why do 80% of all traders fail? It's because those methods are faulty. There's no consistency. Sure, they'll work every once in a while, but the majority of time they don't. And then you wind up getting scared and stopping yourself out, and that's right at the time when you should be getting in. So with these techniques that I'm sharing with you and teaching you today, what's the best idea I know and way in which to invest with pullback trading? Well, once again, it's by using the PET D, but we're going to use it in an entirely different way this time. Here's the technique we have for investing with the PET D. Now, in an uptrend, you see I have uptrend associated here in quotation marks. I'll explain to you what we mean by that. In an uptrend, a small amount of red bars will appear. This is where people usually scare themselves and get out, but this is simply the pullback, okay? So what you're doing is the next green bar that occurs is your confirmation that the pullback has concluded. Now, the reason why we put uptrend in quotations is that most people don't know when an uptrend is in place. Every teacher, every educator, every webinar instructor has a different idea of how to discern what the overall uptrend is. But we at Specialist Trading, myself, I've been using this technique that my mentors taught me 40 years ago, and it is the best and simplest and easiest tool to use to find out what the overall trend is. As we look here once again at Siri, sure, someone would say, well, I thought we were in an uptrend here and then it fell out of bed. Well, the easiest way to find out what the overall trend is to add a free tool that you can apply just about right now. It's on any charting software package. It's the 50-period simple moving average. Now, if price is below, then the overall trend is down. Once price is above, the overall trend is up. So as you can see here, there's no reason you should have been buying or long in your IRA account Siri. Why? Because we were below the 50-period moving average. And look what happened, okay? But this is what most financial advisors, most gurus won't tell you. They say, oh, this is a great, well, we looked at the earnings or this stock with so many customers and clients. It's amazing. It's got so much room for growth. Remember, don't listen to outside sources. Why complicate your trading? I don't listen to those things, and I've been trading for 4 decades, so they must not work, and it must work not to listen to them. So I'm going to give you this simple tool that you can start using today. It's just a 50-period simple moving average. Now remember, if you're a trader, if you like to trade intraday or if you like to trade daily bars, you can still apply this. You don't need to find out what the 50-period moving average is of the weekly or the monthly. All you have to do is apply it to whatever charting time frame you're looking at, and that tells you the overall trend. So since we're investing, we're looking at monthly bars, and so we just apply a 50-period moving average of the current time frame. So see how well this worked for us? It kept us all out of trouble. And then when we started to bottom out, remember, we're not trying to pick tops and bottoms. We're trying to pick some type of a bottom in an uptrend. So we have to wait for the overall uptrend to be in place. And right here in 2011, that's when we had consistent closes above. So this is now telling us we're in a sustained uptrend. We want to look for a pullback. And here was our first pullback right here. How could the PET D have helped us? Well, now that we know that the overall trend is up, since we're investing, that's all we're looking for, we apply the PET D. And remember, we're going to see anywhere from 1 to 20 to 30 red bars. As long as we are above the 50-period moving average, that's okay. That's just a pullback. And we wait for the first green bar to appear, which is right here. And there's your buy signal, okay? Where most people would have thought, whoa, we've gone up way too much. It's time. This is really going to sell off. Nope. All we are concerned about is what the market is telling us. And since the overall trend is up, the market is telling us it's time to resume an uptrend. So then series started to go up. We have one more sell-off here, and then here's the next green bar. All right, so now you buy again if you like, and look what happened. We have a more sustained upward move. Now we have three red bars here. There's our buy, the first green bar, okay? A couple more red ones. And you see how simple this is. Mainly where this differentiates from continuation trading is we're applying this to the overall trend. So in other words, even though we may have three red bars here, we're waiting for the first green bar. That's our signal to get in, okay? Now, I know a lot of you will say, well, Steve, where do I get out or where do I place my stop? Remember, we're just talking about how to get into your investments. Those are all in our courses. We go into full detail. We have numerous exit strategies. We have numerous stop placement. But right now, we're just showing you how to get in where you have a very consistent idea for investing. All right, let's look at Apple, all right? Now, once again, most people got in somewhere around here. They were doing great for about 6 months, and then they most likely lost everything in 2013 by exiting too soon. Well, first of all, we have to say, what is the overall trend? Let's add the 50-period moving average, and looking back all the way to 2008, the overall trend was up. Even though we had some closes below here, at this point, we had one or two closes above. So in 2009, we were back above, and the overall trend was up, and we have stayed overall upward trend up until today on a monthly time frame. So let's add the PET D so we could take advantage of these pullbacks. Once we add the PET D, we see that, boy, this is really simple. Where we were getting out, now we know that we were still in an overall uptrend, and that was just simply a pullback. But even better than this setup right here, let's go back to 2009 when the stock was trading for 20 according to all the splits. We had a series of red bars, and here's the very first green bar, okay? And it's above the 50. So for all intents and purposes, this is a nice buy here. You could have gone long Apple well before we had this sustained upward move going into 2013. Now, we're not telling you how long to hold on to it. You could have, gotten out with 3 times your money. It's just, once again, that's in more detailed explanation within the course. But let's say you're out and looking to get back in, and here's the pullback again, where most people are thinking Apple has topped out and it's time to go short this stock. We're looking at the long term and saying we're still above the 50. Here's the very first green bar. That's our buy setup, okay? Here's another red bar, and we buy again. Another red bar, and then followed by the first green bar. So we had 3 chances to get back in before we had this last really major move coming into the middle of 2015. Now, as you can see here, this is just to show you, and we're not going to tell you that this works 100% of the time. There was a pullback right here at the end or middle of 2015, followed by the first green bar. Now, if you were lucky to hold on and continue to hold on, you'd be okay. But if you place one of our stops, well, most likely this would result in a minor loss. But that's okay. You still have a really nice cushion from these other trades you've made. And guess what? We're still above the 50-period moving average, so you have another chance to get back in right here. So according to this scenario, we are still long on a long-term basis. We're long Apple. All right, let's look at Facebook now. Okay, now we've gone pretty much straight up since on a long-term basis since the stock came into play. If we add the 50-period moving average, remember we have to look back at least 50 bars of monthly bars to tell us if we're above. So we've only can use this technique going back to May of this past year. So we would have to only apply it if a sell-off took place. Now we have sold off here at the last part of 2016. Let's add the PET D. Now the PET D has been green the entire way up since 2013, and we've had 2 red bars. Okay, so what we're looking for is the next green bar on a monthly time frame to tell us to go back in Facebook on a long-term basis. Why? Because the overall trend is up. We're above the 50, but we're not in yet. We want to have the first green bar. That will tell us that the pullback has concluded. Wouldn't you like to know when the next green bar is in Facebook? Well, if you're a PET D course member, you could know with that and hundreds of other stocks. Lastly, Netflix, okay? Let's look at Netflix. Now, Netflix had a tremendous run up until 2011, and then it had a very sharp, steep decline, but then it went all the way back up. All right, what was the overall trend this entire time going back to 2009? Well, we've been above the 50. So even though we had that steep decline, we always knew that the overall trend was up. Now, once we fine tune it with the PET D, we see here that we were always green. Once we sold off here, this was our just initial pullback. We're waiting for the first green bar, which happened in the mid to late 2012. That was our first buy right here. We're above the 50. Wouldn't you have liked to gone long Netflix at 12? Well, you wouldn't have had to worry about what some financial advisor that you were paying commission to was telling you that, oh no, you shouldn't buy this stock. The earnings are terrible and that large sell-off, I'd wait for something else. Or perhaps he was telling you to hold on that entire time and you were scared and wanted to sell. You would have been out of this and would simply have gotten into the stock at roughly 12. And look at the nice run-up you would have had. Now, there's another sell-off here. You could have gotten in long again. Another pullback here. Here's the first green bar. You get back in. The continuation to the upside goes up to 130. Now we have more pullbacks, all three here. This was in last year, and you remain long Netflix. See, trading is really simple. Investing is really simple. If there's one thing I've learned, it's that the reason why we fail so much is because we overcomplicate our trading by listening to outside sources and by taking ourselves out of the game. If you get rid of all these outside noise, that we listen to, forget listening to advisors, forget, relying on convoluted indicators and systems that just don't work over time, and just listen to the market. Have some sound fundamental education that has stood the test of time. You'll be able to make your own investment decisions. You'll save yourself a lot of money, and you'll become a part of the trading process. So let's review before we go into any questions that you may have. The reason that you're being kept out of your trading success, if you've been trading or investing for a long time and you feel, boy, nothing is working, the reason is because you're basically relying on these things. You're relying on what the advisors or what people have been telling you. But once you become a part of the process, that is the best way to invest an extra $10,000. So if you have extra money for 2017, I can almost, assure you that if you rely on these same things, you will not have a better success than by simply becoming a part of the process. Now, most people say, well, how do I do that? Well, this is what we do with specialist trading. We teach you how to do that, okay? Remember, we've just taught you today, there are two types of investing, continuation and pullback. So decide what type of investor or trader you want to be. We talked about simply investing today, but if you're an intraday trader, you can still intraday trade with continuation patterns, or you can intraday trade with pullback patterns. It's the same concept. You just have to adjust for the time frame you're in. Remember, most people feel that the best way to invest is to match the 401k, to max out your IRA, to get a financial advisor. These are all very generic and they're okay, but they don't have a ton of consistency. It's our belief, it's our concept that the best way to invest any extra money you may have for 2017, the best way to trade any extra money is to become a part of the process. If you want to invest, well, that's simply by using what we teach you for investing in ETFs and investing in stocks. So, as we conclude here, I want you to ask yourself this question. Do you think these edges could have helped your investing this past year, okay? And do you think they can help your investing this next year, more importantly? Well, let's talk to you about today's special discount. We're going to offer you the PET D. Now, this is, once again, a tool I've been using for 4 decades now. I use it on a daily basis. I used it this morning for my trading. I wouldn't be caught dead without it. There's no way I can trade without it because it really fine-tunes what the market wants to do. Regardless if I'm trading a tick chart or if I'm trading a monthly chart, it really doesn't matter. It's a roadmap, as you see here, for any market. We give you now, with this course, the proprietary color bar algorithm. It includes the add-on, so it automatically you can upload it to your computer in your charting software package. It will change the colors automatically for you. This comes with 2 continuation trading techniques. It also comes with 2 pullback trading techniques. It also comes with a trailing stop technique, okay? You can apply this to any market, any strategy, and any time frame. And I think the best thing about this is that you also get mentoring correspondence with me. Now, it's not so much that, everyone knows what the formula is for the PET D. What's the most important thing about the PET D is that you know how to correctly apply it to whatever type of trader or investor you are. And that's what I do. You get 40 years of experience of someone using the PET D who can help you apply it. Now remember, you can apply it to other time frames. So if you say, well, Steve, I'm not really an investor. I trade other time frames and I trade another market. All right, let's look at the S&P 500. Here's a daily chart of the S&P 500, okay? Now this was going back to March of this past year. But as you can see here, we had 3 green bars. Now someone looking at this may say, well, you know, the chat room I go to, the guy there in the room tells me that this is just a bounce, that the market's going much lower and that the earnings are going to be terrible and that we should be out of the market, or that you should sell all bounces. That's what the resistance is. We've got some major resistance right there. So those are the things I'm going to do. That's the way most traders trade. They're getting their cue from someone or something else. Get your market decisions from the market, whatever you're trading. And right here, the market is telling us it wants to go higher. So this was the S&P 500 index, and look what happened. In the next, actually in the next month, it went up 150 points. Now that transferred to over 1,000 points in the Dow. Don't you think that could have helped you once you saw that you had 3 green bars in the index? Okay. And what if you're a currency pair trader? Well, let's look at a monthly chart of the British pound. As we can see here, we had a nice run up going into the middle of 2014, and then we started to come down lower. How could we have taken advantage of this with the PET-D? Well, we see here that in looking at monthly bars, in 2014, there were 3 red bars. So once again, for the longer term time frame, this is telling us to be out of the British pound, regardless of what the economies are telling you, regardless of what these these gurus are telling you, these currency pair gurus, regardless of what news is coming about economic conditions. The market is telling you, I'm going lower. So why would you want to hold on to a position? And if you're aggressive, why not short it? Because this was in 2014. And if we look at all the way coming into 2017, we continued to be red on a long-term time frame. So if you're an investor, why would you even be long this? Now, a lot of people looking back at this last year, do you remember something called Brexit, where the currency pairs fell out of bed, okay, with the vote? Well, guess what? We were red a full year, almost 2 years in advance of the Brexit vote. So how did we know? Because the market was telling us. We don't wait, or we don't react. We're proactive because we're listening to the market. So this is the beauty of the PET-D. You can apply it to any market, any strategy, and any time frame. Once again, the best thing about this is that you have 40 years of experience of someone using this, showing you how to apply it correctly. Okay, so here's the great offer we have for you today. All right, we're offering you the PET-D application and the course and the mentoring for $29.95, but we know that not everyone can come up with that lump sum, so we're offering payment plans as well. But this is for a limited time only. But remember, with a payment plan, you don't have to come up with that $29.95. You can come up with a small deposit and still have instant access. You can be up and running today if you'd like. So here's how to take advantage of this and then have me as one of your students for the PET-D course. Remember, you want to start out 2017 on the right road. This is a great, great deal to have. Contact my sister site, Pro Trader Strategies. You can email them at trading@protraderstrategies.com. Probably the best thing to do, my suggestion, would be to call them directly so you can get that payment plan offer that's only going to be lasting for a couple of days. Call them at 310-598-6677. Now, if you are sure that you want to take advantage of this special offer and virtually have the PET-D for a lifetime, well, then you can simply click on this link below. But remember, that link is not live, but if you look at the chat box in the GoToWebinar column on the far right, you'll see in the chat box they have posted the live link to the special offer we have here for today for the PET-D. So if you click that on, it will take you directly to the sign-up page and a lot more information there. But I would once again suggest contacting Pro Trader Strategies by giving them a call. They have lots of trading consultants manning the phones today. They can answer any question. There's no obligation on your part to purchase anything. You can ask them more. But if you want to take advantage of this special offer, though, with the payment plans, I would do so right away. Now, I'm going to leave all this information up here while I answer all your questions, and I want to thank you for waiting on any questions as well. Okay, first question, let's see. Steve, you don't know how much I've benefited from your presentations. Well, thank you, Kay. Boy, this is unsolicited, and I wasn't expecting this. I was wondering, can I use the PET-D in the international stock markets, such as TSI, the Saudi Arabian stock market? And if so, how can I buy it and sell it up? Well, Okay, first of all, we apply the PET D can be applied, remember, in any market, any time frame. Now, I would contact, in terms of tech support and how to use it for that particular market, I would contact Pro Trader Strategies. That's more along their lines, and they can help you with that, okay? But we have people that use it for the Indian stock market in India. We also have people using it in Australia, okay? Also in Canada. So it virtually works wherever there are trends in markets or whatever the market is doing, the PET D can translate what it wants to do. So I have not found a market yet where, it can't translate what it wants to do. Now, even if the market is in a sideways choppy market, that's okay. This is probably the number one question I get, where people say, well, what happens when you're just basically going sideways? Most of the time, if you're going sideways, well, guess what? You'll have one or two red bars up. You'll have one red bar, or I should say one or two green bars up, one red bar down, one green bar up, two red bars down. So you'll see that choppy going back and forth. So it will not prompt you to do anything. You won't have any confirmation. And that, coupled with the 50-period simple moving average, will really help keep you out of a lot of trouble. Not guaranteed, but at least you won't, have so many false setups and trades, because the PET D will keep you out. It won't be confirming a lot of things. So I would contact Pro Trader Strategies. They can set you in the right direction. But trust me, I have not, after doing this for nearly 10 years and for trading the PET D for 40 years, I have not found a single market that someone hasn't said, well, it doesn't work on this. Okay. So that would be my best recommendation. But thank you so much, and thank you for the nice testimonial there. Anthony says, boy, I missed most of the presentation. How can I get a copy? Anthony, sorry that you missed most of it. Don't worry, though. We do have a link for this. All you have to do is contact Pro Trader Strategies. You see the information right there on the screen, and they can send you a link. But remember, if you want to take advantage of the 2-day special, you have to do that right away. So I wouldn't sit on that recording and say, well, I'll watch it that weekend, because maybe the payment plans or that price will have changed, okay? So I would request that right away and then contact them as soon as possible. Let's see, Kenny asks, can a beginner do this? I mean, no experience in trading at all. Kenny, we have, I said this, I don't know if you caught the beginning of the presentation, we have people trading this who have started trading maybe in the last week. They've never traded before. In fact, we have people trading who are brand new to trading. They just, found out about us by accident, decided to watch one of our videos and said, boy, this is great. I have people that have contacted me saying, I've never traded before, or even people that said, I've been trading for years, but I've never made any money. I've always lost. And this is the very first time in 10 years I've consistently done all right. I've made money. Okay. Not saying that you're going to be a millionaire. We're not promising that. We're not saying you're going to buy that dream home in the next 6 months the way some other educators do. We don't believe in that, because we believe your success is directly related to how much work you're willing to put in. Remember, you're making your own decisions. I started at the beginning of this presentation saying we supply you with the tools, techniques, and the mentoring, things that have stood the test of time. But ultimately, you have to put in the homework. You have to put in the work in order to see how you can do it. That's why we always work with you and make sure that you understand it before you actually apply real capital. So to answer your question, yes, it doesn't matter if you just decided to start trading today. It makes no difference. In fact, I think our courses are actually tuned better for beginners, because we make everything so simple. Okay, so no problem at all. And regardless if you trade a hedge fund or if you just started trading 2 hours ago, I'm your personal mentor. I'll be there with you every step of the way, okay? Kenny asks, do I need 10,000 or can I start with 2,000? Well, Kenny, it all depends on what you want to trade. We work with you on that, but you don't need 10,000. For 2,000, yes, there are a number of different tradable little mini and micro mini markets you can begin trading with. So yes, but we'll work with you on position sizing, on money management, so that you don't need a lot. But we don't really want to focus on that so much right now. We just want to focus more on showing you these techniques that are very simple. In fact, they're so simple, most people say, that's it, that's it. Yes, that's it, but it's mainly how you apply it and having the discipline to apply it. Because most of us, get too scared or too frightened or wait for the news events before they make a decision. I haven't looked at news and going on 4 decades now, and I'm still here. So there must be something all right with not having to look at a news event. I never look at news, okay? So you don't need those things. We show and share with you what you really don't need to focus on, and then we share with you what you do need to focus on. And we feel that that's really what makes all the difference, okay? And our methods are extremely, extremely simple. I mean, if you've seen any of my presentations before, you see how simple they are. You can apply them with stocks, with options, currency pairs, futures. It really doesn't matter what market. All that matters is you look at the market and learn to listen to the market. Remember, the one thing that is keeping you from your success is you taking yourself out of the game. Remember, just like I said earlier, would you like to go to a doctor or a brain surgeon that says, boy, you know what, I really don't know what to do here. I'm going to let someone else do it for me. And you're like, what? Wait a minute, you're operating on me. Or what if you were in a plane, going to a different country or a different state, and the pilot says, you know what, I'm not really sure. I'm going to let you handle it because I don't really know how to do this. I'm not really confident about it. But that's what most traders do. Upwards of 80% of all traders do with their own hard-earned money. They let someone else decide for them. This can either be a financial advisor, or it can be someone in a chat room or a trading room, or it can be an indicator that makes all the decisions for you, a system, or it can be some guy on TV. Now, I am just simply your teacher. I'm not going to tell you what to buy and sell. I'm going to give you the information and work with you however long it takes so that you know and feel confident about what to buy and sell. And after a while, you'll say, boy, it's so simple. Why did I ever rely on anything else or anyone else? And you'll put the power back in your hands. In my 4 decades of trading, in my 40 years of trading, there's only one thing that will get you on that road to consistency. And my belief is that making your own trading decisions. So start out 2017 on the right track. All right. If you've had trouble trading before, if you're at the end of your rope and nothing has worked, you spent tens of thousands of dollars on some master system or some master trader, and it's lost you more money than you ever thought of. Now's the time to take control of your trading by putting yourself in charge, okay? So this is what we're talking about. If you really want to take in charge, contact Pro Trader Strategies. They have tons more strategies. We have lots of different things to trade, different markets, different time frames. Anything you're looking for, we can supply you with. But remember, we're simply giving you education. It's you that has to put the hard work in. We're not promising you the world. We're not saying, oh, we have the best strategy that will make you so much money a month. We have some traders who trade the exact same strategy and just make a couple of $100s a month. We have others with the exact same strategy, the exact trading account, that make thousands of dollars a month. It depends on what you are bringing to the market, how aggressively or conservatively you want to trade. Some trade with options, some trade with stocks, some trade with currency pairs. It's okay. There's no wrong answer. The only wrong answer is when you are relying on someone or something else to tell you how to trade, okay? So go back, look at if your trading has been successful. I can almost guarantee you it hasn't been. Don't worry, I've been there before. My first 2 years, I couldn't make a dime, and I was doing all the things you were supposed to do. I was trading support and resistance. I was looking at volume. I was following all the institutions. I was listening to news. I was doing all the right things, going to all the courses, and nothing worked. It wasn't until my mentors taught me to just throw away all that, what they called useless noise, and rely on sound fundamental things that I started to become consistent. So this is what worked for me, and this is what I'm wanting to share with all of you, okay? So as we close here, I just want to thank you so much for attending. I really hope that 2017 is a much better year for you than 2016 was, and I think the best way to do that is by becoming a member of the Pet D course, okay? So thank you so much. Contact Pro Trader Strategies. They can answer any question that you may have. Give them a call if you want to take advantage of that special 2-day offer, okay? Thank you so much. I look forward to all of you become students and members of mine at Specialist Trading. Thank you. I'll see you next time. Bye-bye.